Hello everyone, this is Juan Sarmiento and today is Friday, July the 15th. I'm going to go quickly through my current positions and then we will examine potential trades. Let's look for AXP here, and there's not much to say. It's right there with a delta neutral position, and my next expiration is on the 29th. And you can take a quick look. It looks like the stock is going to go up. The volatility is still high. The volatility might drop, and earnings are coming up on the 22nd. That's next week. And the truth is AXP has not been very successful year to date, $41. I think what I want to do here is get out of this position, except that when you think of it, it is here already a stretch to one of the ends, in this case the smiley face on the downside. Well, the delta is neutral, and let's take a look at the monitor tab here, and we see that we have in this position $960. That's the maximum we can lose. So I'd say let's give it a shot and see what happens. If the position was in the middle here and we haven't done any money up to the end of the year and we have invested too much money on the position, I will close it. But in this situation, well, there's not much to lose. But what about if the stock was to fall, let's say 20 points and volatility spiked, and we could make additional money? If it goes up, it would have to go up, let's say, to 165. That's unlikely, really. But I'm not comfortable with the risk we have on that. So I'm going to leave it there like a lottery ticket. $960 is not much for this account. Let's look at DG here. DG is dropping right now. And the stock, if you take a look at the chart, formed a double top here, which I was expecting. Now it's giving me this sell signal here, and we already corrected this trade so that the delta is negative. So I'm going to leave it there. It looks like it's in a good position right now. And then UPS, which seems to be going higher, and in this case you see that earnings are coming up, all right, and we are in the middle of the cone here. So, and it might appear to you that I'm losing money, but if I hide and just show you the what the position as I entered it in the rollover that I did, we can just simply hide the position, and this is the effect of my position year to date. Unfortunately, here, this big bubble here, you might think, well, all I have to do is wait until it gets closer to expiration. But the reality is this big bubble here that you can see, it really is associated with the earnings. And once the earnings are gone, the bubble bursts, but that doesn't end up with a better profit. No, it ends up being a potential loss, believe it or not. So because we are in the middle here, in my experience tells me that going over the earnings with this kind of a position close to the angle here, and with a bubble, that what happens is the bubble bursts, but you don't get an improvement like you think you will get a $2,000 profit. But no, what happens is that the whole graph, the whole chart drops. So I'm not going to risk it. I'm simply going to say, okay, I made a little money, not a lot, but that's all I'm willing to tolerate. So I'm going to select everything here, and I say analyze closing, and it says double diagonal. But of course we have to adjust because we're selling 4. It's not exactly a double diagonal. It's more like the longs need to be closed by selling 4 of them, and there we go. That's the trade to close now. Okay, so let's confirm and send, and wait until that gets filled. All right, take a look at the chart, and then you can be looking at a stock like this. Look at the volatility is 45 at the top of the range. That's going to fall really dramatically. And so it's a better time to get out. This is one of the reasons to get out before earnings. Not in the case of AXP, although earnings are coming up too, the stock has already fallen, and we are risking little there, and a big move in either direction could give us additional profit. So it is very important that your delta is neutral and that you are on one side of your chart, not in the middle of the cone here. Okay, remember that, it will come handy. Okay, I have I wouldn't recommend going fishing for trades right now because the volatility is a little high and still declining, and you can look at some stocks with earnings coming up. Those are the ones to look at. For example, Apple is due to report earnings, so we can certainly keep it here and see what happens on earnings. Akamai, same thing. Earnings are coming up and the volatility is still high. It will drop at earnings, and if the stock jumps above the Ichimoku cloud, for example, that might be a good opportunity. Amgen, same thing. It's reporting earnings, but volatility is high right now, and look at this. It is around the Ichimoku cloud, and that to me looks like it wants to go down, but that's just an analysis. I wouldn't make a bet on it. Okay, so I was sort of interested, but no, now that I see the earnings are coming up, and you would see many earnings season is about to begin, and we will see some candidates jumping up. Amazon, finally, it's split 1 to 20, and so the stock was around 2,500 thereabouts, and with a split it came around 10, so it makes it more feasible for us to trade, but not right now. Volatility is high again, and the earnings next week. These are candidates that we might look at next week. AVGO, volatility is low, but the stock has been going down. I'm going to actually remove it from my list. I don't know why I have it there. Best Buy, same thing, is at the bottom of the chart. Volatility is high, and the earnings just came in. So yeah, it's nice when the volatility, when the stock goes up, but the volatility drops, as you can see, after earnings, and we don't want to be facing that with any stock. Costco, they did report earnings. The stock went up nicely, and now the volatility is coming down. This is a potential candidate. We'll look at it in a minute, okay? Let's take a look at Target or Target. Yeah, look at how it dropped. Yeah, let's remove that too. Okay, let's see if I would trade Costco. Well, the volatility might be towards the bottom here. Go to the trade tab, and on the Costco chart, go down to where it says days options statistics. It says 32. But this might reflect more the front volatility rather than the back volatility. So let's go to the analyze and make a pretend trade here. I would look for October because it's more than 90 days. And I would look for the strike price of 519, 520. By analyze, no, we need to do it in the trade tab. I always forget that. Okay, again, October for my back month, 520, and then we say buy custom Genie trade. This is, I'm sure you have created already. You have probably already created one of these orders, custom orders. But if you haven't, all you need to do is enter the trade tab and say, select the strike price you want to buy and say buy, trade, and go to straddle. Okay, that creates an October straddle. I'm going to show you the risk graph so you see what a straddle looks like. We need to do another one, so press the control key and click here on the ask and say buy, trade, straddle, and that adds it up here. Okay, that was my UPS now filled. Okay, now we're gonna go to a maximum of 28 days sounds good. Okay, 28, 35 days. Okay, same strike price, 520, and press the control key again and hover over the ask or bid, and then right click and say analyze sell, trade, straddle. Keep the control key pressed, and that created my exact same trade. Now look at the back month and front month, and you see 30, 27, 27, and 27. So a really quick calculation. Okay, I'm going to use my calculator here. Let's clear the memory, and I'm going to say using the back month options. You see the volatility. Okay, so 30.46 plus 26 plus 0.99, 26.99. Okay, and divide that by 2, and that's the average for the back month options. Save that and do the same for the front month. Let's clear. Okay, 26.74. You're seeing the number here. Okay, plus 26.55. My average is, divide that by 2. My average is 26.45. So I'm going to subtract this to the memory, and then memory recall, that was 2.03. So that's less than 3%. So that means, yep, we can trade this, right? Notice that we have a cone here, and in the cone, and let's amplify that, you have a maximum gain here of 1,000. Now you need to make sure that this is okay to trade. It says 92.48 times 100, it makes 9,248, which is about 10%, less than 10% of my account. So that's, money-wise, it's okay to trade. Okay, so to do only one, and my maximum gain, if the stock lands here in the middle, would be 1,000, which is okay. But of course, if the stock drops and volatility increases, we can make a whole lot more. And if the stock rallies, say, to 600, we also make more money. So that is quite all right. On average, the volatility is acceptable. Okay. One more thing to check here is this a liquid stock? Well, I can tell you it is, because it's Costco, and it's a big company. So let's take a look at the analyze tab. You can say fundamentals here, and no, it's not showing that. Economic data, that's what I want. No, it's not showing it either. Yeah, it's not showing it here because it's a fake account. It's not a real account. But in your account, if you look at fundamentals, you would see the market cap for this. Oh, wait a minute, it's not including it here. Let's go to Costco. Symbol COST. No, here it is. Okay, that's what I was looking for. So in the data here, you can see, if you scroll down, you would see market cap 238 million shares. Okay, 238 million times this number of shares. I think that's how it goes. Bottom line is several $billion, the market cap. So it's a fairly big, you don't need to really do this. That's just for curiosity. The risk profile, when you do this, what matters really is that you, before entering the trade, you say create duplicate order, and that will give you the mid and the natural. And actually these numbers depend on how popular the options are. So again, the calculator again, you can simply enter the natural, 94.7, minus the mid, minus 92, that gives you 2.7, and then divide that by the natural, 94.65, that gives you 0.028. Okay, multiply that by 10, it gives you the percent. It's 2.85%. So this is means to me it is liquid. So we won't have any problem getting in and out of the trade, particularly not in real life. It will be easy to trade this. Okay, and the reason I check that is because in real life you will want to know this. Okay, let's send this trade. And that's the only trade I want to do. Notice that it's the one that has already had earnings, and it jumped very nicely after earnings, and the volatility is fairly low. And one of the things that this volatility, the IV percentile of 31, that might be a little high, but everything else checks. Okay, so that's how I made that decision, and that's the trade I'm making. Okay, the UPS, we ended up with $5 today, and of course now it's out of my list, and now I'm substituting it by Costco. DG is another of those Dollar General. I think the LTR is one of them. ALT Dollar Tree. That's the one. Okay, this is another one that is doing really well. It dropped with Target, but then they report their earnings that beat expectations, and the stock jumped. Volatility is still a little high. So let's put that in my candidates here. The LTR. Okay, so you see the big jump, but the volatility was still high. Now it's really dropping. Okay, so let's examine this. Go to the trade tab, scroll down to current IV percentile 27 is high. Okay, which trade would I make? Well, November, and the strike price will have to be as close as possible as I can make it to the 168, the strike price. So let's put 170, and say buy custom Genie. Okay, so the same way, let me tell you something. You can save this Genie trade. Let's say if you create it just like we did on Costco, this trade, you can say select the trade and then create duplicate, and then you see this, it has a floppy disk and a script. So click on that, and you're saving a template, and then you call it Genie trade, and then from here on you would see it in the list which I just selected, and it would generate a good trade to start with. You would have to still check to make sure that this is what you want. Okay, so November, yeah, that's what we want, because November is more than 90 days from now, 126 to be precise, and my front month is 35 days. You can also have 35, and we can have also the 28 days, which will be August 12th. Of course, the one to the back, further back, the August 19th will give us a little more credit. Okay, these are the two potential trades. Notice the implied volatility on the front month and back month. Okay, so 39, 35, 42, 32. So this is not going to work because the volatility of the November call is too high compared to the August call, and it's the same with the August 12th and the 19th. So this is not going to work, and I don't really want to, and it doesn't really look right. The cone here is rather small, but we'll keep this until next week, and maybe we'll change our minds. Okay, so I have this list for next week and whatever may come from my other indicators. That's all for today. Thank you very much for joining me, and see you next time. Bye-bye.